Okay, welcome everybody to this evening's XAUUSD Securities webinar. My name is Duncan Cooper. Thanks very much for your attendance. All right, tonight's webinar is Forex trading live market analysis, so we will get into that now. Before we do, if you can read through the disclaimer, that would be great. As we're going through the webinar, if you have any questions, just put them into the chat box or the question answer box. If you're on our YouTube live stream, I cannot see the chat, but I've given you a link. You can come and join us in the webinar if you want to talk to me, but I can't see the chat if you're chatting there in the chat. All right, so everybody, please read through the disclaimer before we move along. So I was saying, any questions to the webinar chat or the question and answer box? All right, we'll move along. Now, if you're new to the webinars, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at XAUUSD Securities. And I'm a full-time Forex trader. I've been trading now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. Through the week, you can connect with me at our website, acy.com. Go to the Market News tab or our YouTube channel, XAUUSD Securities Australia. And I'm also putting some analysis out on my personal handles there. So my Twitter's there and my LinkedIn's there. If you want to follow me, just take a note. As well, through the week, we have our Telegram channel. If you want to get access to that, just contact Nathan Bray. I'll put his details in the chat in a moment. So if you want to get access to my chart layouts and templates too that I'm using then for MT4, then just contact Nathan. So if you've got a question about a demo account or a live account or anything really to do with myself and the webinars here, just contact Nathan. He will help you out. All right. Let's get into tonight's webinar then. So first up, we will look at the news for the next 24 hours or so. So coming up this evening, 11 p.m. These are my time. So New South Wales time. It's not a red calendar event, but 11 p.m. got the US S&P CS Composite 20 HPI year on year. It's not a red item, so I don't really worry about that. At the midnight though, moving into Wednesday, we do have the US CB consumer confidence data. Big one for the Aussie crosses tomorrow will be at 11:30 for the Aussie CPI year on year. Expecting a actual rise there. So the market will be looking, we may be getting another interest rate decision rise in Australia. Some pundits are saying we will get one more this year. Others are saying not. We'll have to wait and see. But I mean, if we get positive data, then maybe we'll have to get another rate rise. So the market will be clearly looking to that figure tomorrow for the Aussie crosses. And then into Thursday, we have the Eurozone German and Spanish CPI data there. US GDP Q2 coming out 10:30 p.m. for the US unemployment claims. All right. And you can just head over there and just go and read what is coming out for the rest of the week. But those are the next 24 to 48 hours of data to be noted. So really the Aussies are the Aussie pairs are the dangerous ones over the next 24 hours, true reality. All right, let's get to the charts now. This is a dollar index monthly chart. We're actually trading above the old top here. So theoretically, this has turned into a monthly uptrend. Okay. Weekly trend has been in an uptrend now for 5 weeks at least. And we've been moving up here now 2, 4, 6, 8, 10. This is the 11th week. Taking out 1, 2, 3 weekly tops, in fact 4 weekly tops if you can't count that hidden one there. So it is worth making the comment that nothing goes up forever. So it is difficult to be, let's say we're trading a pair versus the US dollar, which is going to the sell side at the moment. It is difficult to keep selling because potentially a short-term bottom will come in and a short-term top potentially will come in here on the dollar index. So just got to be careful you don't get caught as this tops out in the short term. So just bear that in mind. Excuse me one moment, just trying to get my new drawing tool to work. All right, so, just looking at this dollar index, it wouldn't be surprised, we're almost at the end of the month. And often then we will pull back inside the range of the month in the new month. So it wouldn't be any stretch to see is really false break that high there and at least pull back at some point in the next few weeks. Unlikely that we're just going to continue up. You can see here on the weekly chart that, you get these pullbacks, haven't really had a pullback yet of any description. So we are due some corrective phase at some point. So I've just dropped down to day chart here, clear high tops and bottoms. It's a bit overextended in the short term. If we, do a bit of fib work here, we're at the beyond the 127 extension into the 162 extension. So I would be, have an expectation of at least some form of pullback to maybe a 62 or 79% level before another move up. Being a buyer at the top of the move isn't the wisest thing, especially when we're trying to move above monthly resistance here. All right, so that's my main point. We're overextended. We haven't had too much of a correction yet from the weekly scale. We could be due at least a 1 or 2 week pullback. All right, S&P 500. Wasn't able to have the pullback I was looking for there, but it's clearly turned into a downtrend. Now on the day chart, just dropped the weekly chart. So I've been discussing a lower top forming here, which we've got, and we've actually got a lower bottom now. So theoretically, we could be topping out here at the 79% of this major range. Day trends down. It is overextended. This line, where am I getting that line from? Oh, there's a weekly high here at 43.23. So we may get a bounce there. And this day chart rundown is due for a bounce. So, if you're wanting to get short the S&P 500, I think the mode of operation would be, in the perfect world, would be to look for a rally back to 62.79. And then you're looking to short for the next move down, okay? 62 level there at 44.32. Of course, when you're waiting for a rally, sometimes the market won't give you a rally, but we are 2, 4, well, at least 6 days down there. It's due a rally. You don't need to be selling and get caught at the bottom of a move. So question of being patient. And we're at the bottom of the month at the moment. So potentially we'll retrace some form back inside September's range as we head into October, potentially. All right, let's drop into the euro dollar. Continuing to move down. Here's the monthly charts. Broken below one monthly low here. I think this is the low of the year here at 105.16. So we've got a very long month down. Again, like I've just been saying on the US dollar, I'd maybe expect some form of rally back up the range a little bit. It's very rare that we don't have some form of rally back in the range the next month. All right, and we're getting close to the end of the month. Trends are quite clearly down. There's no argument where the trend is. All right, there's a weekly chart. And the day chart here. In the short term, we've moved now below 106.35, committed below there quite clearly yesterday. We may see a rally back to that level, and that's what I'll be watching for. So on the 4-hour chart, I will just be monitoring the most recent range. And the 62 level, 106.32, almost the same as 106.35, the broken monthly low point. So that would be the area to watch for me at the moment. Can we rally back to that level? Look to sell a rally within this dominant downtrend at the moment. That would be the level I would watch. If we get a stronger rally, the next level up is at 106.86. But seeing that as we've broken below last week's low and 106.35, then we may just stay within this 4-hour range here. So I will be looking for a retracement. 62 level at 106.32. 7% levels at 106.49. Either one of those levels would be an ideal level to start to watch price to fail at if it rallies back up. And there may be a little bit of an imbalance. Let's go to the 1 hour chart. There may be a little bit of an imbalance. Now it's actually been pretty much filled up here at the 79% area. There is an imbalance over here. So if we start to get a corrective rally this week, locking up to 79% of that range from last week's high to the current low, this imbalance in here, may need to be filled. So if we start to see a strong corrective move occurring, we could be heading back up towards the 10700 level. But at the moment, I would be watching just this 4 hour range at the moment. So it's there. Just want to move to the 15. Today's projected high comes in pretty much at the monthly resistance level, 106.35. So that would be my area to watch today if we could get there. Price will be stretched if we get up there today, 62 level. All right, there's a bit of maybe a fraction of an imbalance in this move down here as well from the 15-minute chart. So price may want to come up and fill some of these areas of yesterday's movement down. There's a very small imbalance still in here, maybe. Just there. There's an imbalance in there. So we may see price move back above there. You can see though at the moment, 106, we can't get above 106 today. So over the next 24 hours, if you start to see 106 holding intraday, you could maybe look for your setup at 106, but at the moment I'll be looking up to the resistance level at 106.35. Euro yen, still remaining rather range bound. We're having a bit of a 7% failure within last week's range, but it's very difficult to determine which way this is going to break. If I had to, trade with the trend, higher time frame trend is up. Weekly trend is up here. It's very flat on the day chart and mixed. I mean, it could break north, it could break south. What I am noticing over the last few weeks, this weekly high here is pretty much 157.99, pretty much the 158 level, is you can see over the last few weeks, we're pretty much closing at or below that level. So we're moving around that level, but from a week-to-week basis, we're getting capped there. So, I mean, we could top out. Their chart's very mixed. What I'm noticing based on last week's range, which is quite a narrow range, high to low. Yesterday, we were topping out at 79% level here. So you could have shorted up there. Could be at break-even by now. We have moved down and made a smaller range here. So I'm just going to drag this fib over. So we've got a smaller range here at the moment. So if you're wanting to trade this pair, it is in a downtrend on the 4 hour chart. We could be trading down to day support, 156.86. And you could be simply 79% level there, as you can see. So that's across yesterday's range. So we're rolling back up within inside yesterday's range to today's low. 79% level is pretty much overlapping 158. So that would be a great level to watch for failure if we get there. You look for your setup up there at 158 today. Euro pound. Now it is testing this significant high point. That's actually a monthly minor swing point on the monthly chart here. All right, so we could be getting a change in trend back to the upside or a failure there. On the weekly, we've been failing in this area. There's a number of weekly tops in this area. We've got monthly and weekly resistance up here. It's pretty much 87.21 down to 87.18. at the moment we're at this top, so we could actually form a double top here. The thing, what we're definitely seeing at the moment is the euro dollar is obviously declining, but the pound dollar is declining stronger. That's why the euro pound's moving up. All right, so we rejected there yesterday, 8,700. We're at that level now testing. So you could be watching there for failure today. All right. What you could be doing, we're clearly testing up there at the moment. You could wait to see whether this 4-hour candle, how this 4-hour candle finishes. Does it back off? Does it start to want to go below the 79% level there? And do we start to see a failure here? You could be watching for a trend line break. Sorts, that's a little bit acute at the moment, but over the next hour or two, you may see some form of trend line break or trend line that you can draw in like so, and then does it break? Does that give you a trigger that you want to trade back down to the downside? So clearly at resistance, weekly resistance, last week's high there. Is it going to hold there? Held there yesterday to trade down. Is it going to hold there once more to trade down again? All right, getting the pound dollar. Pound dollar is just trading by this daily support level over here. It's only a minor area, but it is an area of support. So what we're seeing on the weekly chart, broken below the weekly low here. It's worth having a look at the monthly chart. I'm just using this area over here as a historical level of monthly support potentially. But there's another low there. There's not this year's a more recent low that I'm not sure if that is in this year. So that's this year's swing point low, 118.03. So we could definitely be heading towards 118.03. Just going to pause because the question came in, which I missed on the euro dollar. Timothy, you're asking me, will it not be safer to sell at the top of the range rather than the 79% fib level since it's ranging? The euro, I don't know if it's ranging. I mean, it's in a clear downtrend here at the moment. It's just a question of selling a rally. I'm suggesting on the 4-hour chart that we may just hold within this range. That may come up to the top of that range. That might be this area here could be a good area to be selling if it comes up there. But it's a question of where does price come up to. So you have to monitor the levels, and then this where does price start to maybe hold and top out at, and where do you want to trade? Well, we've broken below, on the euro dollar. There's monthly support there, 106.35. We've clearly broken below that level this week. So on the 4-hour chart, that's that level. That's at the 62 level. So to me, that would be the level to watch. And you're saying, would it be safe to sell at the top of the range? Well, I'd have to get to a top of a range first. I'm not quite sure where your top of the range is, but hopefully that helps. All right, back to the pound. Now, the monthly trend here on the pound is actually up, but it's in a weekly downtrend. And it's going to be long, if the monthly trend is going to change here, we'd have to break this low, and that's going to take a long time to get there at the moment. So just some levels to watch. This level here is at 119.86. Get down to that level. Support from the weekly chart is actually below 19.86 at 19.15. So we've got a good 200 pips to go before we get 200 pips to go before we get down to these levels. All right, and we're just testing a minor level on the day chart here of support. So price will bounce off old levels of support. So we could bounce off any one of these support levels on the day chart, but the stronger level of support is down here, just underneath the 120 level. Now this is overextended. It's like 5 days down now. I don't want to sell it after a 5-day decline. All right, it's a patience game and waiting for some form of rally. The perfect scenario would be to see, quite simply, for this to drift back up to 123.08, broken support. This pair has done it countless times before through the course of this month. broken support, became resistance. We actually broke below this level, became a resistance just there to trade down. All right, so just being patient. Price has been great if you were patient on this pair through the month. So game patience at the moment. To the 4-hour chart. It's quite a small 4-hour range here, so I would be looking. This is last week's high. I would simply draw a fib from last week's high to the current low and keep dragging it down if it keeps moving down. And if we keep moving down a little bit more, let's say, another 50 pips or so, or maybe 100 pips. If we get down to maybe, what about 121.80? Yeah, we drop about 60 pips. This 62% level then would overlap with that level, and that would be a good rally level if we could have a rally. So just monitoring a rally. I don't need a fib level overlapping broken support, but it's always nice to have a fib level overlapping. So I would do some fib work, keep dragging that fib down if it keeps moving down. But my primary level will be to wait and see if we can rally back to 123.08 or 12300. As I said, 4 or 5 days down at the moment. Difficult to keep selling after so many days down. That would be my one thing I would be concerned about at the moment. All these pairs to the US dollar. If they've had 3 or 4 days down, and as I said, the dollar index is trying to hold above at the moment monthly resistance. Dollar index could false break. These pairs to the US dollar could have a 3 or 4 day rally back up, or at least 1 or 2 day rally. So you don't want to get caught at the bottom. So I would just simply watch 123.08 there, to, 12300 area. Pound yen. This is monthly support. If you go to your monthly chart, it's 180.41. It's this area over here that we broke above and started to be support on the day chart. Now the trends are quite clearly up, but you can see nothing really changes this month. As we get to the end of the month, we are having a negative month. So that may mean we're going to have some follow through into another negative month next month, especially if the pound keeps selling off. Weekly, trend is up here. And, we could be just in a corrective phase within this weekly range. And the 62 level overlaps with 180.29, which is the monthly support level. That would be the level that I would watch. We've been a little bit short of it at the moment. So again, it's just a patience game. Can we pull back to the 62 level within the larger trend, hold, and then maybe have the next, move up? On the other side of the coin, we could obviously move down through that level. And, if we hold this day chart structure, but we can have a rally this week, then I would simply, if we can have some form of rally, I would look at a move back to the 182.67 level to then trade down to this level. All right. There's a bit of an imbalance in here, which may need to be filled, that big drop candle there. So very simplistically, I'll just be waiting to see if we can rally to 182.67 approximate area. Do we turn over, trade down to support, and then look at that to be support in the most immediate term. So I just want to drop down to the 4-hour chart. We have this imbalance in here. You monitor the range of last week, high to low, draw fib. And that would be the area, the 62.79% area where that 182.67 area is. That's the sell zone at the moment for me to trade down from. Now, whether or not price can get up there, but you have to pick the best areas to look to trade from. We have this imbalance in here too. On this candle here, there's an area imbalance within that candle just there. So if we want to come up and fill the imbalance, we'll be at that 182.67 level and the fib area. That will be the area to watch for an opportunity to sell down from. All right, let's get into Aussie yen. Now, difficult to trade the Aussie pairs at the moment. CPI dollar coming out tomorrow, and nobody knows how that's going to lag when it comes out. What I have noticed is, and I said this on Thursday, the level to watch. Thursday, I left you with this equation. I think, what day was Thursday last week? 21st. So price was down here, and I was suggesting we look for a 79% retracement. Well, it's giving you two chances to sell at that 79% retracement level. Retested it yesterday. 95.73. Go to your weekly chart. It's this weekly area here that very strong weekly area that got formed last year as resistance. All right, so today chart, we have an area here, 95.85, and the other weekly level at 95.73. That's your strong resistance level at the moment. Now, when the CPI data comes out tomorrow, we could obviously, depending on what it is, we could spike up there. But if it spikes up there, it is worth them watching. You can see on the 4-hour chart today, we've rejected up there today. So there's a high chance if we spike up there, we could reject tomorrow, assuming it can get back up there. That is the area to watch. And it's also last month's high up there. We're actually failing at August highs and July's high up there. Okay. So 2 monthly highs. I had a webinar last week on the importance of the monthly highs and lows. So that's why it's holding there. There's August high and July's high there. Now on a smaller scale, if you think we've already failed up there, from today's high to the current low, you could be just monitoring 79% levels just there at 95.64, or you could be still monitoring up here. Anywhere in this area, 95.64 up to 95.73. It's only like a 10 pip range there. Up there, I'm sure we're going to meet some more sellers today. Unlikely that the Aussie will move too far. Waiting for that CPI data. Couldn't commit above there yesterday. Well, I couldn't commit above there on Friday or Monday. Early Tuesday, it can't commit above. So there's the potential that we won't commit above there unless we get some good data from CPI, Australian CPI tomorrow. Aussie dollar. Now, unlike the pound dollar or the euro dollar, the Aussie dollar is rather range bound. It's very similar to the New Zealand dollar. They look very similar. And, you know, if we go to the weekly chart, 2 positive weeks over the last couple of weeks. It is in a downtrend on the weekly chart because we have a lower top, lower bottom still, getting a little bit range bound. Depending on the data released tomorrow, yes, of course, we could get a movement back up. And I have been saying this month that this range here, we could well move back up with inside that range. That big sell-off, we might need to trade back up. All right, to higher levels. Not because the long-term trend's changing, but just how the market works. We've created this double top, we've collapsed. We may need to come up to the 62% level or 79% level to find, you know, traders will take profit. As if this starts to move up, traders will take profit, and then it'll move back up the range, which then offers you the opportunity to sell at a better price within the continued higher time frame trend. All right, so we're obviously consolidating here. This low here is a monthly low. Now, clearly at the moment, the market's struggling. It can trade above there, but it can't close above there over the last couple of weeks. So maybe we can't trade up here. So the most well-used level at the moment is that 64.58 level. That's the level to watch at the moment in terms of if we keep failing there, it's an opportunity to sell there to trade down. But from a You know, if I have a personal choice, I would much prefer to see this trade up now to a higher level. Back up to 67.79, 79% fib. And in a perfect world would be a revisit of this area over here. Just wanting to see where the weekly top is. That weekly top there, which is at 68.05. The market really struggled there. So as we're heading into a new month next week, you know, planning maybe where the next great positional trade could come around on the Aussie. 68.05 would be, 6800 level up there, that's 79% fib, would be ideal. And we may be, that's the higher top to that top. We could be forming a higher bottom down here. So over the next 2 to 3 weeks, we may see opportunity to trade up here. It's difficult to trade up this way at the moment until it clearly breaks above 64.58 with commitment and pretty much the 65 level. If you keep failing at 65, it's very difficult to trade up and get long. All right, but we could be bottoming down there for a move up. So I'm just watching that patiently. I'm not that fussed about selling at 64.58 because I've got in the back of my mind that we potentially might be bottoming here to at least correctly move up, all right? And maybe forming a higher bottom here too. So, you know, you could maybe say that this could be left shoulder, head, right shoulder, all right? And, you know, if we keep talking about this, I'll come up with a reason to buy it. Is we're holding at the 79% level over the last 2 trading days, or 4 trading days, I should say. But on the 4-hour chart, it's been down here twice. All right, just short of last week's low. So maybe we're actually bottoming out here to trade up. Difficult to get long down there, but maybe it's getting ready for a long move up. If the CPI data is positive tomorrow, and it really comes in positive to maybe incite the RBA to raise interest rates, this is probably heading up towards 68. So we'll have to wait and see what the data brings. And then, you know, if tomorrow we're closing above 65, I think, you know, we could be heading up towards 68. So we'll just have to wait and see what the pair's doing. All right, sorry, New Zealand yen. It's getting back up to the top of its range. Got my fib drawn at the moment. What is across a monthly candle? That candle there, the last 2 months are trading within inside that range there. So I'm just monitoring that range. Over the last 3 months, we're above it at the moment, but really over the last 3 months, we're struggling at these highs to the left. So I'm not that excited about being long up here. Even though the monthly trend here is up, we're just trading within the range of July. We were very consolidatory last year. Very high prices for the New Zealand yen at the moment. I would just be waiting to see if it offers you, this is in an uptrend on the weekly chart, I can quite clearly see that. Trading back up to the high of the year. But that candle range of July, we're still within it. We do have these tops just here as well on the day chart. So I will be monitoring these 2 tops. Where do we close today? Because if we end up with a rejection candle today at these 2 highs, just coming up to that top there too. You know, if we reject today closing below the 79% level, that could be a good opportunity to start to look for a short. So on that pair, I'm just watching to see what it's doing in the area that it's in. This is also moving up because I'm sure the dollar yen is still moving up, trying to move up. All right. So just watch. I'm just watching on some of these pairs. I'm just watching to see what the market wants to do. New Zealand dollar, day chart here, very range bound. 59.85 has been a great selling level. It's a monthly low that we moved below. Had a very small candle for this month, and it's the same with Aussie dollar. So that's why I'm thinking that we might trade back up within the range of the previous month's large move down. All right. So it's very similar. I am just monitoring to see if we come up this range. All right. We do have high tops and bottoms here on the day charts, but it's getting capped at 59.85. But if we get a strong close above 59.85, as I was saying on the Aussie dollar, I think next month we will be moving back up the range. So at the moment, to get long, I'm going to need to see a very good close above this 59.85 level, and then we'll start to watch price action for some kind of trade that could structure to the upside, maybe to, you know, see if we can get back up to maybe the 79% level of the range. All right, now we've failed once, twice, 3, 4 times at 59.85. Maybe we keep failing there, and we're just going to fail there and never get back up the range. That is a possibility. So if you're prepared to, you know, watch, you could be today watching. So from Friday's high to the current low, you could be watching up to the 79% level at 59.76, up to the resistance at 59.85, and simply watching that area up there. What happens up there? That's where the sellers are going to be. If the sellers are in command and they're keeping this held at or fractionally below 59.85, that's where you're going to find them today. So that's where they've been holding it for the last, well, for most of the month, right? For all of the month. So, you know, that's where the sellers have been all month. So if you want to sell it, wait to see if price gets to where the sellers are, which is up there. Okay. Dollar Canadian. Now that's how I left it on Friday, and that would be still my viewpoint. Monitoring to see if it can come back up to that area, the 79% level. We got this potential left shoulder, head, right shoulder that could form. All right, that's what I'd be waiting for. These are weekly tops to the left. This is the weekly chart. This is the monthly large range that we've been trading back up within. Fair at the 79% level. Failing at these weekly highs at the top. And waiting for some major kind of pattern to form up here if it can get up there. So just waiting to see if it can get up there. What I can notably see is this area of broken support, 134.89, is holding as resistance. So you could look to that level to trade down from. It's testing it today, tested it yesterday, tested the day before, and the day before that. So maybe, you know, maybe it can't get up, can't do this very nice corrective move up there potentially. What we're definitely seeing on the 15-minute chart is failure, 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 failure at that level. So as you know, as the webinar is running, we're failing here. So, you know, you could look to structure a short here around that level if it further tests today. All right. But I would much prefer the higher level. You know, I always like the 79% levels. I'm more than prepared to wait 2 weeks for that to get back up there if it wants to get up there before looking to trade it. Assuming it can get up there, it may just want to hold here and then trade down all week. So you need to make your choice. At the moment, short-term resistance is at 134.89 up to 135. Okay. Dollar franc of the monthly range. So this is a monthly downtrend. Long-term trend is down. This is corrective. We're just a little bit above the 62 level. A little bit above this monthly resistance level here. Could form a double top within the range here. So that's the monthly range, high, low, but we could form a double top across here. So if we get some form of rejection here over the next 1 or 2 days, that could be a double top, and you know, if we close back below the 62 level and the monthly resistance level, you know, this could trade back down. If that trades back down, then clearly the euro dollar would trade back up. All right, so I'm, you know, some of these pairs I'm just watching. It's not giving me a signal to sell that at the moment. I'm not going to buy it at a significant top either. So I'm just watching to see if it can start to signal a reversal or not. In fact, that's the week. Sorry, I just need to correct myself. That's the weekly level. I was looking at this as a day chart. So that's a weekly double top potentially. And that's your monthly range from high to low. So let's just move down to daily. So at the moment, the daily is not showing any sign of a reversal, but notably to the left here, there are 3 resistance highs, which we could definitely falter at. So I would just be watching here. Does the day chart show rejection and reversal back below the 90.84 level today, or tomorrow, or the day after this week? All right. It holding above 90.84 could mean that we're definitely moving higher still this week, but clearly closing below that level this week, that would get my attention, and then I'd have to drop to a lower time frame to see what's going on. So we're definitely in an area where the market could top out at. It's not showing its hand at the moment. Dollar yen. This is at a day chart level. Just zoom it in or zoom it out. Zoom it out is the correct phrase. That's the range that we've moved down from. We're getting above the 79% level. We could be heading up to test last year's high. Of course, we are seeing a little bit of rhetoric from the Bank of Japan saying that prices at too high levels, and they can come in and intervene at any time they want without you knowing. So it is very difficult to get long at them, or be long or get long at such high levels. That is the problem. This is where this area here, that high point that we're testing today was the first lower top formed before we started to trade down and then intervention came in. So it's a very difficult level. All time frame trends are up, monthly, weekly, day trends are all up. If you wanted to get long, you can see we've moved above this top here. 147.94, 147.68 is a monthly top from 1998. So we've moved above that level at the moment. Is just going to put a line across that top. 147.946. So that's daily broken resistance. That would be a support level to watch for a pullback too. And you can draw a fib from low to high. Down to the 4-hour chart so we can see it clearer. And the 62 level is at 140.02, and that daily support level now from here is at 147.94. So that would be that's where if I wanted to buy that pair, that would be the level I would be happier at. There's no way I'm going to buy up here. I would need to see a pullback. So 62% retracement back down today as support. That would be a level that I could entertain. At least then if you're buying a pullback. You're not getting caught at the high of the move where potentially the Bank of Japan could come in and intervene. I don't know whether they intervened last week, but there was a bit of a heavy sell-off down through there. All right, so we could get a heavy sell-off down to this level. So start to hold. If it does, around the 148 level could be a good level to watch through the week, depending if we get a pullback. All right, let's head into gold, which just starting to shift back down to a downtrend on the day chart. Edwin, you said you took a sell on the dollar yen at 148.90. All right, well, you're brave, but I mean, it's very high up there. Just looking at the 50-minute chart. Well, if it could definitely break down today. It's at high levels. So let's wait and see. All right, gold. This is the day chart. As we were saying last week, the weekly chart here is a bit mixed. We have a higher top. Sorry, we have a higher bottom, lower top. So that's lower top to that top. That's higher to that bottom. We could be putting in a further lower top here, which then means we've got two lower tops and a higher bottom until anything changes. So it is a little bit mixed still on the weekly chart. The day trend though has turned down. The higher bottom that was starting to form here on weekly support is breaking down a bit. So that 1916 level, which is from the weekly chart, which is this historical high over here, keeps moving above and below that level. As we're moving below at the moment, that's the level to watch. Any rallies do they start to hold at 1916? All right. You see where it was support through here, then we broke below. So, really 1916 is a level to watch. Can it come up to 1916, hold? Can you see an intraday opportunity to short? That's what I will look for. It getting back above 19.6, then maybe then favors a false break and a move back up. It's not easy at the moment. Gold trends are mixed, certainly on the weekly chart. So clearly, on the day chart perspective, we'll just discuss what's going on. US dollar is going to a new high now for the year, for this year anyway, and then clearly, pairs to the US dollar moving down, and generally gold follows that direction when we have the current situation. So, but it is rather range bound there. So, I'd look for something that was less range bound as an instrument to trade. But 1916 could be resistance to trade down from if we move to the 15-minute chart. Leading from tomorrow into today, 1916 here on the 15-minute chart is where we've topped out for the day. Well, put an intraday top in. So that would be an area to watch if we got back up there today, quite clearly. All right, now I just got a request to have a look at the NAS 100. So let's just do that to finish off. So it's very much like the S&P 500. Of the major range is the weekly chart. This drop down through 22, moving back up. Similar failure at 79% level. Similar lower top forming on the weekly charts. Move back below this area of support resistance. All right. So we could be seeing a continued decline. I think the mode of operation after 4 or 5 days down or so, however many days it is there, it's at least 4, if not 2, 4, 7 days. Now draw a fib across the range and look for a rally. That's in a day chart downtrend. Needs to come up somewhere to put in its first lower top. An ideal area would be this area of broken support at 15,140. The area just there, fibs at 15,172. That would be a great area to look for a short if price could get it back up there. Within that trend, we're definitely seeing downtrend starting to form. And I don't know if you see on there tonight's slide. Yeah. I did have a look at this today. I was talking about indices. We were talking about up here. I don't know whether you got short up there, but clearly it did start to fail there. So the Nikkei Japanese 225 created some form of double top up there at the 79% fib. So Slav, I don't know whether you got into that one. All right, any final questions? Okay, thank you. Pound yen recap. This is my 4-hour chart look, but the day chart, really looking within last week's range to see if we can we rally back up to 182.67 for, for that to hold as resistance to trade down. That would be the area I would watch. So that fib's drawn across last week's range. Do we get a rally back up to 182.67 is the broken day support area. Fib levels 62 to 79% areas at 182.44 up to 182.90. And there's a bit of an imbalance in there that could need to be filled. All right, everybody, just to give you a heads up, tomorrow's webinar, if you want to join me, is an introduction to price action trading, understanding market structure. So that will be tomorrow evening at 7. More analysis on Thursday. Just to give you a heads up, we have daylight saving time changes. So if you're in Queensland, the webinar times don't change. They remain at 7 p.m. Queensland time, but it will be at 8 p.m. Next week, my webinars are at 8 p.m. Sydney time, moving forward for the next 6 months. As we have daylight saving time coming in New South Wales and potentially other states. All right. All right, everybody. Thanks very much. Have a great trading week. Look forward to seeing you next time. Thanks, everybody.